Thanks for tuning in. Now, all across our lives, we've seen the INR, the rupee, depreciate against the dollar 3, 4, 5%. There was a period briefly in 2007-8 where indeed had a bit of an appreciation, but largely since then we've seen the dollar appreciate against the INR. Now, that's what people believe would be a perpetual case. Maneesh Dangi of Macro Mosaic tells us that the other end could also be true. And Manish, I believe that's your base case?
Yeah, that's my base case. That currency in India, doesn't depreciate at the run rate it did. The case of India currency appreciating, of course, doesn't exist because our inflation is going to be higher than US's. Okay, but then we, even adjusting for inflation and productivity differential, the growth in that, our currency depreciated a lot more because of our reliance on crude and generally global goods, that we have to import. We are a perennial CAD country, current account deficit country. So we import more than what we export. And that puts a lot of pressure on our currency. Okay. There is a case for a variety of reasons. Valuations, which is our currency, and many emerging market currencies are extraordinarily cheap. The cyclicality of dollar, that the dollar tends to have these, 5-10 years of bull market and 5-10 years of bear market. And then generally demographics in India, how it's evolving, it's sort of a general view that you see, look, crude has also rallied significantly from mid-90s at $10-15 to $100 odd on average. So that all led to major depreciation in our currency. A lot of these are unwinding, which is why my base case is that if I were to take a very long view, 10 years for sure, but even longer, there is a case to make that Indian currency's run rate of depreciation will halve or even lesser. So it's about, let's say, I am baking in about a percentage depreciation on average. That has large implications that we can discuss. But that's the reason why I'm thinking that Indian currency won't depreciate.
And there's so many people talking about this current account neutrality or CAD neutrality, so on and so forth. And plus, if India becomes a large exporter of not just services but manufactured goods as well, that helps the CAD too. Do factors like these could that impact this theory of yours even more, in that it might be even better, the performance, than the 1% depreciation that you are baking in? Can that happen?
Yeah, possible. But I don't believe in serendipity. I don't believe that macros suddenly turn. I believe in cyclicality. I believe in the old trends have better insight to what holds into future. So I'm not of the belief that suddenly manufacturing, which has been sort of tepid growth for last 10 years, even last 10 years, when everything that we wanted, lower taxes, PLIs, China plus one, materialized, the non-oil, non-gold manufacturing in India grew at just 3% annually. So I'm not a believer of manufacturing renaissance. I'm a believer of service renaissance, which has been there for the last 25 years. We barely exported, software to the world. And now we export almost as much as 3-4% as a percentage of GDP. We've become hegemon in software industry. And this hegemony will rise. Our key export is people, which basically through remittances give us another 3%. So all of that, and in absence of any major crude spike over next 10-20 years, it is likely that our CAD will be close to 0 to 1%, which has been a case, by the way, in last 25 years also. Average CAD has been only 1-1.5%. Only intermittently when crude spikes, it goes to 3%, 4%, but precisely then our currency depreciates significantly. It's likely that a counter force in terms of service export, has come to neutralize the effect of crude, and to that extent, this recurrence, sudden 15-20% depreciation that happens in currencies sporadically, every 5, 7, 8, 2001, 2008, 2013, 2018, 2020, that may halve or they may disappear. And which is why I'm getting a 1%. But if, let's say, your view were to be right, that we truly become a manufacturing giant, then why not appreciating currency? China, by the way, the currency hasn't depreciated for the last 25 years in any meaningful fashion.
That's true.
There is another implication, an interesting one, is that in dollar terms, India's hegemony will rise. See, all of the increase in our GDP or per capita, in dollar terms, basically the effect is muted because of 3% depreciation. Whereas China's gap between us and them has increased because they did not depreciate.
Sure, sure.
I think that also, to a certain extent, will play a big role in actually having a convergence with China. That we are no more relative to China like becoming pygmier economy. We're likely becoming converging with them with respect to their overall output.
And which is not a bad economic outcome as well. So essentially, the base case, the rupee is on an escalator downwards. There won't be slippery slopes, very likely.
Yes.
Perfect.
Very steady.
Very steady. Great. Manish, thanks so much for explaining this in such a succinct fashion.
Thank you.
And viewers, thanks for tuning in.